The PGIM India Flexicap Fund, which was earlier the multi-cap fund, has a good allocation towards mid-caps and small caps along with large caps. The PGIM India Flexicap Fund usually has large caps in the range of 45% to 60%, while the remaining portion is allocated to mid and small caps. The portfolio consists of 40 to 50 stocks, where at the top end of the portfolio, we are looking for stable businesses. In the middle end of the portfolio, we are looking for growth businesses. And at the bottom end of the portfolio, we are looking for turnarounds. In all this process, the focus always continues to remain on good quality businesses, which generate strong cash flows and have clean balance sheets. The fund has a decent exposure to IT, industrials, and material, which include chemicals and cement. We have increased our exposure to financials, but after the COVID second wave, we have turned cautious and we are in the wait and watch mode. We have negligible exposure to consumer staples as that segment is expensive. We continue to build portfolios with high return on equity for investors. In our funds, the process framework has worked very well and which has helped us build good, clean portfolios with strong cash flows over time, low debt, and strong ROEs. We look for good businesses which are available at reasonable price or reasonable valuations. Hence, growth at a reasonable valuation is the guiding principle in terms of building the portfolio. The process framework is aligned towards eliminating risks as far as possible. The starting point is the operating cash flows generated from a business. We try to analyze how companies have managed their operating cash flows at the bottom of a business cycle. We study companies over business cycles, which are usually around 5 years period. And these companies must have generated positive operating cash flows at least in 7 out of 10 years to be selected into the portfolio. The focus then shifts from the cash flows to the balance sheet. We look for businesses which have clean balance sheets and have manageable debt. High debt increases the mortality of a business and creates risks in the portfolio. We look for businesses which have debt to equity of less than 3. The last criteria is that the company must have no major corporate governance issues in the past. These 3 criteria put together try and eliminate the risks as far as possible. The PGIM India Flexicap has a low overlap with the benchmark, and the idea behind constructing the portfolio is to invest into the top 40 to 50 businesses as highlighted by our process. The low overlap would be a good complement to the overall portfolio of a client. The PGIM India Flexicap has a good allocation towards mid caps and small caps. As the market continues to broaden in participation, the mid and small cap segment of the portfolio has the potential to generate good alpha. The fund has consistently had low leverage, low beta, and a high ROE over the last 3 years.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.